Hi, this is Charlie giving you Monday's video, and I hope you're very well. I'm just going to go through with you, if I just move this across, some of the traits, shall we say, of successful traders. I talk about this sort of stuff all of the time, but one of our traders in our trading room got hold of a report that FXCM have done just recently, the broker, just taking all the data they have across all their clients, and it just gives some statistics on what their clients do, those who are profitable versus those who are not profitable. So it's quite interesting statistics. So for example, historically they looked at loads of different currency pairs, but they picked out the euro dollar, and they said, for example, their data shows that euro dollar trades closed out at a profit 61% of the time. Having said that, the average losing trade was worth 83 pips, whilst the average winner was only 48 pips. So traders lost 70% more on their losing trades than they won on their winning trades. And we always talk about this sort of stuff. So yeah, it's all very well being right 61% of the time there, but when they do actually have losing trades, they lose that much more because their losers are bigger than their winners. So that was I thought an interesting one. So let's see, I'm just scrolling through off screen with some of their other information. So they talk about obviously risk to reward. And here we go. It says traders who traded with a 1-to-1 or higher risk to reward, 53% of those were profitable. Now, of those that weren't, hold on a second. Sorry, I misread that. So yeah, so traders who traded with 1-to-1 or higher risk to reward, 53% were profitable. Those who traded with an inverted risk to reward, only 17% of them were profitable. So it's not to say that you can't be profitable with an inverted risk reward. We all know that you can be, but the numbers just drop off. So it's only 17% there. So it just gives an idea there. And then if I'm scrolling down off screen at the moment. Another big factor was how profitability declines. I'll bring the pen up. Profitability declines with the more leverage that you use. So they found that traders who used more leverage the ones who use too much leverage end up losing more. So let me just turn the pen off. So for example, 40%, bring this up, I would have just brought up the document, but it's too big to show on here. 40% of traders who used less than 5% leverage were profitable, whereas only 17% were profitable who used greater than 25% leverage. So the age-old rule applies. Don't overgear your trading. I've talked about this in recent weeks about a trader who was well overgeared on a pound-dollar trade. So don't overgear your trading. Use the leverage, but be responsible with it. Okay, and let me just scroll down. I think there's some more information here. I'll just press pause while I'm doing this. Yes, the last one. I thought this was interesting because I do talk about this as well. And I'll actually take a screenshot. I can do this. Here we go. And then you should be able to see this then. Yeah, there we go. So this is the last bit of information, which shows the percentage of profitable traders by average trading equity. And as you can see, if you've got less than $1,000 in your trading account, let's get rid of that. Sorry, I've got stuff coming up off screen. If you've got less than $1,000 or $1,000 or less, then only 21% of traders were profitable. Whereas you can see the profitability increases with the amount of money that's in a trading account. And again, with any statistic, you have to be careful because they're stats at the end of the day. And what I mean by that is that traders who are trading with $1,000 or less, let's say, they probably tend to be newer traders, and newer traders tend to be less profitable. So it sort of makes sense. And then gradually, as the experience grows, then more experienced traders tend to have more money in their account, and because they've been doing it for longer, and so they're more likely to be profitable. And so, as we can see at this end of the scale, up at greater than $10,000 in their account, then a higher percentage are profitable. So anyway, really interesting statistics there. So I think the main thing we can take from this is that, let's see if I can get rid of this now. Oh, it's not allowing me to. Bear with me a second. The main thing we can take is don't be undercapitalized. So that's the last factor there. Watch your risk to reward ratio, which is another one that we often talk about. And what else have we got? Risk to reward ratio. Let's have a look. There was another one in here. Yeah, risk to reward ratio. Don't be too undercapitalized, because that can be difficult. Make it difficult for yourself, because it means that certain trades you can't even take. And the other one was your leverage. Watch your leverage. Don't be over leveraged. Don't use too much gearing. Although it's there available to you, don't go betting the house, so to speak, and going too big on your leverage. Hence why get your risk management right. Anyway, that was what I wanted to go through today. So I've been reading that off screen whilst trying to do it, so it wasn't the best of videos, but I thought it was just some interesting stats that came through there from FXCM. I don't actually like them as a broker particularly, because but they were still interesting stats there that they've released. Nothing that we don't already know, but it's just still interesting to actually have actual figures on that sort of information. I hope that's been of use to you today. I shall leave you to it. Back on for, oh no, it's Good Friday this Friday, so there won't be any live trading this Friday. So be back as and when. Next Monday's a bank holiday, so might be a week or two. See you for now.